Welcome back to another episode of the InvestTalk Sector Spotlight. Today we'll be talking about consumer staples, an essential part of everyday life. Today we're exploring everything from the sector structure to the biggest companies shaping our daily essentials. We aim to give you a comprehensive understanding of this industry's drivers and future outlook.
I don't think most people realize, and I find it fascinating, how these everyday products play such a crucial role in our lives and in the economy. So let's get into what drives this sector forward.
Well, the main driver of price action in the near term is actually interest rates for most of these names. Why is that? Well, the consumer staple sector tends to be low growth. You're talking about large companies, and they tend to grow at the pace of the economy, the broader economy. And therefore, they trade at relatively low multiples, and they don't have a lot of projects to plow their free cash flow back into. And so typically they do two things. They buy back stock and they pay dividends. And so a lot of these consumer staple companies pay dividends. And that's a lot of the reason why people buy these companies is for that dividend. And when companies pay a outsized or above average dividend, shall we say, and their businesses tend to be non-cyclical, people own them for that consistency of that payout. And when interest rates go up, bond prices go down, these also tend to go down as well. So that's the first thing you have to understand about the consumer staples sector overall, is that you're getting companies that tend to have fairly high correlations with the overall bond market, less so than the actual stock market.
Yeah, investors that invest in consumer staples do it defensively because typically when there's economic stress, people have less money to spend. These are the products that they don't cut out of their budget. They're very stable. And therefore, if you really think about it, the things that generally are going to affect profit margins are going to be the cost of labor.
Yep.
And the input cost into the products that they're selling. So when you have outsized wage inflation, which honestly in the area where typically the employees from these types of companies reside in the economic area and socioeconomic area, that really has been where the outsized wage inflation has been over the past couple of years. And aside from that, you have the input costs. So you think about where supply chains kind of broke down in 2020, 2021, it became more expensive to manufacture these products. A lot of these companies took a pretty big hit.
Yeah.
And so when you have that coupled with rising interest rates, where it becomes more expensive to invest in your supply chain, profit margins can generally suffer.
Yeah. And in an inflationary environment, it makes it difficult to operate in the consumer staple space. Like you talked about, the higher inflation increases the cost of labor, increases the cost of those raw materials, increases the cost of transporting the end product to the stores, to the consumer. So that's certainly a factor as well. And then inflationary environment increases interest rates generally as well to compensate for that higher level of inflation. So all of those factors mean that if we are in a secularly inflationary economic environment, consumer staples are probably not a place that you want to have a ton of exposure to. Doesn't mean you get rid of it completely. It's not an all or nothing thing, but you have to be very selective, and only in companies that are able to pass along those costs to the end consumer. And most of them cannot, because there are competitors, and a lot of times store-bought brands, right, that are think of Kirkland brands, right? In Costco.
You know me, I love my Kirklands.
Yeah, there you go. But those are the overall the overarching aspects that you really have to understand about the consumer staple sector, because most people are chasing after that dividend. And as we always say, never chase the yield.
I think you have a mug to that effect.
I do. A client actually.
You should have brought it today.
I should have brought it. I did not.
Next time.
But next time. But yeah, it's important to understand these low growth business, fairly low margin, highly susceptible to inflation, and the ultimate price movement is going to be impacted by bond prices as well.
Absolutely. As I mentioned, the demand for staples is essentially constant, but the factors driving growth can vary from subsector to subsector, from health trends to sustainability efforts. If you think about what affected groceries, for example, going back to your Kirkland example, I remember going to Costco and the line was, first off, you had to get there at 5 a.m. just to get in there to begin with, but everybody was fighting over paper towels when it first started. I think most people will recall that. And then eventually it got to the point where you could only leave the store, Costco, a massive, massive grocery store. You could only leave with one package of canned tuna. So, the groceries, for example, packaged food companies are going to have different types of issues than other household products.
Yeah. And that was during the pandemic, but what's most important is actually durable trends. And I think the work from home environment has had a profound impact on the grocery industry, and mainly because we're at home more often. A lot of times you ate out because you were in the office 5 days a week, and maybe you wanted to go out with your coworkers or the like. And when you're working at home, you're more able to control what you eat. You can make, your own lunch and breakfast, and
you're essentially
dinners.
trading the amount of time you spent getting ready to go to an office for being able to prepare for what you're doing at home.
Exactly. And people are more focused on their health now. And so they're trying to eat healthier. And the cost to eat out is more because of those labor inflation. And so it's important to understand those secular trends and understand that companies that are benefiting from people working at home, it's not just the technology companies, it's also those companies that are selling products or groceries that the work from home people are consuming.
So we mentioned packaged foods, groceries, but I think the most interesting one that you mentioned is health trends. So there's been a lot of news around Ozempic and weight loss and being healthy more generally. And if you think about it, that affects the economy in a grand way. You essentially can move into a situation where people are spending far less on healthcare. That's going to affect the healthcare sector, but also it's going to could completely shift the types of products that people buy in grocery stores. Maybe we're going, we're not getting Cheez-Its anymore and we're buying a lot more fresh produce, or we're buying a lot more health conscious breads or things like that. So certainly these health trends, should they become more longer term, and with these new weight loss drugs, should they actually get a foothold in the pockets of the American consumers, that would certainly be a long-term trend, because that is more of a wide-changing, life-changing event than just it's the new year and I'd like to eat a little bit healthier this year. So it's going to be interesting to see how those dynamics shift, because like you said, we care more about the durable changes than we do the short-term changes.
Yeah, and you talked about two there. One is the Ozempic, other is diet shifts. And I think the diet shifts have been happening for a long time. Pre-pandemic, people were still moving, they call it away from the middle of the store towards the outside of the store, where you had produce and less processed meats, etc. And I think that is only going to continue more towards organic groceries, etc. And I think that is a trend that won't change no matter what the medical drugs, what the medical drug trends are. Now Ozempic is the other one where, okay, how long lasting is this? I've seen many diet drugs come out throughout my history,
and most of them don't involve weekly injections.
Exactly. And there's always some side effect that is sometimes very scary. I think of fen back in the early 90s. That was a huge problem with Pfizer. And there's been a lot of fads in that space for a long time. So we're seeing same issues with Ozempic. 70% of the weight loss is actually lean muscle mass, which has terrible impact on your long-term health.
That's the part you don't want to lose.
Exactly. You want to lose the fat, not the muscle. And so, I don't think that is a long-term trend. I think for certain people that are in dire need, sure, maybe. But for the vast majority of the country, a better solution would just simply be to not eat. you know, um,
Because that's essentially what the medicine is doing.
yeah,
Anyway, it's
that's
making you not want
exactly.
to eat.
Exactly. So you talked about two trends there. One I do think is durable, and one I think is more of a flash in the pan.
No, that's an excellent point. But I think that the broader point is that people are shifting the way that they choose to nourish themselves. More so, like you said, certainly in the early 2000s, people were doing it. Great. People wanted to be healthy. But I think that in the wake of the pandemic and people seeing comorbidities and risk factors associated with how they decide to live, especially in this country where a large percentage of people are overweight and an increasing percentage of people are obese, in the wake of the pandemic, people want to be more healthy. That's, like you said, that durable trend. And so, if anything, Ozempic, these health drugs, have more so made companies think about the actual trend, which is that shift towards health.
Mm,
So, how they decide to invest their capital in products is going to be interesting going forward.
yeah. And another large trend I think is in the sector.
Mm.
There are a lot of influencers now
Mhm.
that are able to
Influence.
influence, start their own line, right?
Yeah.
Clothing lines, makeup lines, skincare lines,
Mhm.
etc. And how much does that eat into the market share of the Estee Lauders of the world, for
Mhm.
example? So I think that's another secular trend that isn't going anywhere, right? Social media is not going anywhere. In many ways, how social is social media anymore? It's more media than social.
Product
But
placement.
yeah, exactly. And so, the fact that there are so many more eyeballs there than your traditional media, where most of the Procter and Gambles of the world are advertising, I think these sectors have become a bit more fragmented as well.
Mhm.
And so that is another durable trend that will see through any recession
Mhm.
and will color the performance of many of these companies that are unable to keep up with those trends.
Yeah, I like to say products have become more artisanal.
Artisanal,
Artisanal,
kind of like the
people think
beer, right? The beer trend. That was kind of the
exactly,
first
or
one.
people think of their artisanal breads. Now
Yep.
it's their artisanal face creams.
Yes, exactly.
Now, artisanal face creams aside, we should probably take a look at what we think the long-term outlook is based upon some broader secular trends, not just in the consumer staples sector, but across the economy. So what trends do you see that have a chance of shifting not just consumer behavior, but how these companies react to that consumer behavior in the economy writ large?
Well, we talked about a lot of them already. Obviously, rising inflation.
Mhm.
So there's shrinkflation, right? Where
Shrinkflation,
where a lot of these companies are uh,
slimming down the products and charging the same price.
exactly. So we're probably going to continue to see more of that.
Mhm.
And I think the question will be is how are they going to adapt to the influencers that are encroaching on their space? Are they going to acquire these companies? That's typically what they've done. The
Mhm.
packaged food market, for example, there are many companies that General Mills, for example, has bought up a ton of small little granola bar companies and protein bar companies to try to uh, prevent their market share from being taken. And
Mhm.
so I think that will continue. I think those secular trends aren't changing because these companies have a lot of cash flow. And while while they can be hurt by this, they can also capitalize if they're led by the right people and making the right acquisitions. So following those trends for their growth will be crucial because if they aren't making those acquisitions, they're probably not keeping their market share.
So it's more of a long-term drivers, kind of building on that long-term view. What do you see as the narrower, short-term 2024 outlook for people that may want to allocate more towards consumer staples, especially in the wake of the things that we already talked about, which is a rising interest rate environment? Again, these are long duration assets. They
Yeah.
have very stable cash flows. They may suffer from having slimming profit margins because
Mhm.
of costs. Given all that information, how do you think people can utilize that to change how they allocate in their portfolio to this sector?
Well, I think in the near term, it goes back to what's the bond market doing,
Mhm.
and you can argue those longer term secular trends, but those have impacts in more of a 3, 5, 7, 10 year time frame as opposed to 3, 5, 7 month time frame, right? And so it's important to understand that dynamic and focus on companies that have good balance sheets. There's a lot of capex that goes into building the factories that go into producing these products. And so if you aren't executing on that efficiently and you're leveraging up your balance sheet, buying back too much stock at the wrong price, for example, paying too high of a dividend for too long, we've seen that many times where it looks like a good yield, 5, 6, 7% dividend yield. Oh, this is a packaged food company, but they have problems and they have to eventually cut that dividend. And so it's not about the nominal dividend yield that it's paying now, but it's about the ability to sustain that dividend and grow it over time. So that's what I would focus on now is are which companies can continue to pay that dividend and likely grow that over time, because that's what's most important is can they double their dividend over the next 5-10 years? If they can, you're going to do very well in that particular stock. So as we conclude our comprehensive review, we've covered the consumer staple sector from its fundamental structure to the market giants and through its future outlooks. Our journey has provided a clear view of the sector's crucial role in the economy and in our daily lives. Thank you for tuning in to another edition of the InvestTalk Sector Spotlight. Please like and subscribe, and we'll catch you next time.